world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Steve Lemon, co-founder of CurrencyCloud, a wholesale FX and payments company. CurrencyCloud's API-based payments engine automates B2B payments and FX, powering an impressive range of fintechs, including Klarna, Travelex, Revolut, Azimo, Payoneer, Fidor Bank, and previously Kantox and TransferWise. Earlier this year, CurrencyCloud raised a $25 million Series D round from Google Ventures, which will allow it to grow its U.S. presence and expand into Asia. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Steve Lemon. Steve, welcome to Rebank.
Thank you.
CurrencyCloud is an FX and payments backend for some of the best-known fintech companies: Klarna, Travelex, Revolut, Azimo, Fidor Bank, Payoneer. I believe you even supported Kantox and TransferWise as they scaled. Can you describe CurrencyCloud for us and the services you provide?
Certainly. In simple terms, it's a payment engine. We have a platform that automates the business processes around cross-currency and cross-currency management and international payments. It's been built as a utility, has something like 50 different API calls that enables our clients to pick and choose which components they want. It's been deliberately built as a modular platform. Mm-hmm. The idea being we're part of the payments Lego movement, effectively, so you can use our platform to build your own products and services on top of it.
You've been in fintech since before it was fintech. I understand you were involved with an FX business called HiFX at its outset in the late 90s. That would have put you way out in front of the current fintech boom. What did that company do, and what was the experience like?
So this was the beginning of the unbundling of financial services from the banking environment, actually. Well, certainly in the FX and payment space. So we were one of the early movers in terms of building a business dedicated to the provision of better exchange rates, better guidance and assistance in terms of exchange rate movements, and just a generally better service. I ran the retail business, which ended up being the biggest retail business in the industry at the time. It was exciting times, but it was all service-led. It was before the technology arms race took hold. So it was all very much manual processes and service-led, but it was great fun.
Yeah. What did FX and international payments look like when you started HiFX? What was it that made that opportunity work?
To be honest with you, back then we were educating our customers into what FX is, and the fact that when you buy currency when you're making an international payment, the exchange rate that you get is different to the exchange rate that the bank gets. And when we're educating people in the concept of there being a profit margin in it for the bank, so the conversations we had were along the lines of how you buy currency, what types of currency contracts are available to you, and the merits of using a specialist provider over a bank for reasons of cost saving. Very different to where we find ourselves now.
And back then you guys could provide it more cheaply because of your willingness to provide it more cheaply, or there were structural reasons?
Yeah, absolutely. I mean, it was a fairly standard pitch, actually. We were a wholesale provider. We were processing billions of dollars every year. We were getting wholesale rates ourselves and passing on savings to our customers because we didn't have, what was the pitch we used? We didn't have fancy marble line banking halls and company cars and pension schemes to subsidise.
I suppose there are perks of working for banks.
Well, there were back then, perhaps not now.
Good point. It seems to me like there are many businesses that still operate FX and international payments that way.
Yeah, absolutely. It's It's a big market. I mean, something we talk about a lot, actually, that the world is getting smaller. There are more and more diaspora, and that isn't changing, despite Donald Trump's best efforts. And global business, globalization is a thing. The rise of the populist movement is against globalization. It's happening for a reason. Business is easier. Global business is easier. I don't see that trend reversing. Back in the HIFX days, we used to talk about the size of the FX market being $1.7 trillion a year. Now you don't even bother measuring it. It's such an enormous market. There's such a huge amount of money moved around the world on a daily basis for international business purposes, never mind the additional liquidity of FX as an asset class. And it's one of those markets that the banks, despite everything, the main banking establishments still have significant market share, very significant market share. So the seemingly endless rise of specialist FX and payments providers and fintechs in that space, I don't think you're going to be running out of opportunity anytime soon.
We're recording at your beautiful offices near Liverpool Street in central London. Every time I come here, especially around lunchtime, I'm shocked at the lines I see running down the sidewalk at a few of these FX kind of money conversion kiosks around the station. It's phenomenal.
It baffles me as well, to be honest with you. And I guess that kind of speaks to my point, actually. There are still people that prefer to transact. I mean, obviously, the money kiosks, that's cash exchange. We don't deal in cash, obviously, and typically our customers don't either, the partners we work with. But it never fails to amaze me. There's City Forex over there. There's Thomas Exchange in the arcade, and even at 8 o'clock in the morning, as you say, the lines are just phenomenal. And I don't understand where they get the business from, because these are all people wearing suits. They're all business, bankers and people working in the city, needing to exchange cash. And you think, well, aren't you aware of the fintech revolution that's going on?
Well, obviously they're not listening to the leading fintech podcasts, or else they would be. Maybe after this, they'll all be transacting wholesale via CurrencyCloud. You eventually left HiFX, and before long, we're back in the FX and payment space again. What brought you back?
You never leave. No, so when I left HIFX, at the time, it was, I thought, very competitive. So we were running the leading business in the industry. I was running the biggest part of the business. And I left HIFX after 8 years. It was a great ride. It was hard work and tumultuous and what have you, but I'll have to go and set up a recruitment business, thinking that'd be a good break for a while. I'll never do that. Recruitment's a horrible business. But at the time, I felt that the market was very, very competitive, and it was beginning to reach saturation point. In the 2 years that I left, you started to see a change in the dynamics and a change in the emphasis. And the emphasis changed from being all about service and pricing, and it became more and more technology-led. And all the fintechs, as they were, such they were at the time, had proprietary web portals that they were pushing their customers onto. But I got introduced to my business partner at the time, Nigel Verdon, who was the CEO. It was his brainchild, actually. I'd love to take the credit for it, but he saw a way of doing things slightly better with coming from a pure technology background. He was a technology consultant, and he had a vision of presenting APIs to the world and embedding the underlying functionality into existing applications and services that customers are using on a day-to-day basis. So we ended up talking about pricing transparency and provision of the service through an API, which is effectively PSD2 now. But we were talking about that back in 2010. And it was hard gaining traction back then, obviously, because not everyone was talking about it. But now having an API is not a differentiator. Being transparent in your pricing is not a differentiator. But at the time, it was a really exciting concept of coming back and actually being able to make a real difference and actually being able to have an impact.
So the difference, it sounds like, technology, connectivity, the fact that, leveraging APIs in the way that a growing number of companies are today, from everything from banking as a platform to Nigel's current venture, Rails Bank, which is an interesting API play.
Yeah, absolutely. Yeah, it's a PSD2 play in itself, isn't it?
So I'm always interested in entrepreneurial experiences. I'd love to know if you guys made any mistakes in building or scaling HIFX, and whether or not they informed the way you approach things at CurrencyCloud.
Plenty. I always used to joke that we were successful in spite of our best efforts, rather than because of them. But to be honest with you, back then, when we were growing HIFX and when we were scaling it, it was an entirely different marketplace. So we just had to turn up and be good at our job, and we would acquire business. But now, because of the rise of technology, because of the rise of the VC community, we've got a lot of very, very smart people with very smart ideas in the fintech community, and these are backed by even smarter people with huge venture capital funds at their disposal. So all of a sudden, these fintech companies are run like proper going concerns. I mean, some of them are run with investment bank like precision, but back in the HIFX days, it was very much more a pile 'em high, sell 'em cheap sales model. It's a very, very different environment, and you know, it's good to see that even the original incumbents in the HIFXs of the world nowadays have matured and grown up hugely and run like mini corporations.
What were the biggest challenges in building a company like CurrencyCloud?
Apart from the fact that we originally set the first iteration up of the business in the immediate aftermath of the financial crisis. I mean, I met Nigel in 2008, and we formed the management team and formalised the first fundraise, seed capital round, in April 2009. So that was really, really challenging times to get any business off the ground, never mind a financial services business. But we took the mentality, if you can build a business in this environment, you can grow in any environment. How hard can that be? It turned out it was really hard. But some of the challenges we had back then seem to be recurring themes now. Obviously, compliance always has been and always will be a challenge. Compliance requirements and your obligations in this context are only ever going to go in one direction. That's never going to get easier. It's never going to go backwards. And you just it's not something that's ever done, quote unquote. It's something that is an ongoing process that you constantly improving and constantly challenging yourself to do things better. But the other main challenge that you have in this environment, back in the HIFX days, bank accounts and banking relationships, they saw you as an opportunity to place super FX on payments volumes through one relationship, one aggregator. It was great. But now the banks are, your banking relationships are a valuable asset, not a commodity. And when you're starting out in fintechs, I see it all the time, it's difficult to get a bank account or banking services for a payments company. And in many respects, our banking partners act more like regulators than the regulator does, because they're worried about their own obligations. As an established business, that's great, and you deal with it. But to set up in this environment must be incredibly challenging.
And that's, you talk about your bank partners effectively acting as regulators, and that's from a kind of stringency of compliance standpoint. That's making sure that you are complying with their compliance standards, and therefore that they aren't exposed to any AML risk.
Yeah, absolutely. I mean, you back in the original early days when we set CurrencyCloud up, we could take a look at a business. If we wanted to bring on a regulated entity, we could literally say, well, this is a regulated entity, so our KYC would be very light touch, as opposed to having to go through a full due diligence process as you would do on an unregulated entity. But now, one, you can't rely on the fact that they're regulated, and two, we have to find ourselves doing things like obtaining copies and scrutinising the quality of their AML policies and procedures. In certain circumstances, we'll even get a copy of the MLRO and compliance officer's CV. And in very extreme circumstances where we deem it necessary, we'll go and meet the team and interview them. So it's a complete change in in mentality. You can't just expect the other guy to do his job. So when you're processing payments on behalf of another organisation who are in turn providing a service, you've got a much, much higher set of obligations and expectations of you that you have to meet.
I think the payment space is notoriously labyrinthine and opaque for a lot of people. Can you break down the connections for us? You guys presumably integrate with banks, payment systems, fintechs, money transfer companies, probably others. Can you walk us through the moving parts?
In terms of our customers or
in terms of
the back end?
Both. The flow and where you guys fit in.
Okay, so it's interesting you say that, actually, because this is something that I find myself talking about increasingly, actually. Having an API is no longer a differentiator. Everybody's got one now, and if you don't have one, then, well, you're not going to go anywhere. But the lines between who's a customer, who's a competitor, who's a collaborator, they're not even blurred anymore. The lines are non-existent. I mean, it very much is a collaborative economy. It's a real ecosystem that we all participate in, and one of the great things about API connectivity is it allows you to pick and choose the functions and components of different organizations. These guys have built it, so I can use that API to improve my service to my customers. I don't have to go and build it myself. So you're right, there's a hell of a lot of moving parts, and some people do certain things better than others, and the people that will win, I think, will be the organisations that pick and choose the best parts and have got the best mechanism to get in front of the customer.
Presumably the services that you offer to your customers are services that banks, if they wanted to, could offer those customers, apart from maybe technological aspects, for instance, a highly functional API. But in terms of access to wholesale rates, access to wholesale markets, presumably that's something banks could if they wanted to provide. Why don't they? Why does a company like CurrencyCloud need to exist?
So banks do provide FX and payments on a wholesale basis. That's why we have a business ourselves, because obviously we are a consumer of those services from our banking partners on the supply side. I think the difference is the way we present it. So effectively what we've done with our platform is we've built a platform that outsources the entire business process. So if you imagine the components, the individual components of a cross-border or cross-currency process and a cross-border payment, you need a mechanism to collect one currency, convert it into another, pricing management to apply markup, risk management mechanisms to monitor open FX positions, reconciliation against the underlying customer account, settlement, and then obviously compliance. So beneficiary collection and sanction screening, validation, storage, data management, and then obviously the distribution. None of that is rocket science, and the banks have been doing it themselves, and financial institutions have been doing it for themselves for decades. But what we've done is we've built the infrastructure, and rather than using it for our own purposes and becoming a service provider, the infrastructure we've built is the service. So we've turned it inside out effectively. So rather than going and acquiring the end customer to service on the engine that we've built, we expose APIs. The engine is the product, the engine is the service. So our customers are now free to pick and choose which items of that workflow they want our platform to manage for them. And the FX and the payment, it's incidental and almost byproducts. So it's a toolkit, it's a set of building blocks on which that you can build your own payments product.
What's your view on the consumer-facing FX and international payments landscape at this point? We've seen an influx of fintech companies from TransferWise to Revolut. What's your feeling generally about the way that market's going and price competition and viability of business models and all the rest?
Do I detect a leading question there, Will? So look, there are some guys out there doing a very good job. Obviously, you've got the likes of TransferWise and Revolut, and to an extent Kantox, doing a great job in terms of getting the name out there, and fantastic marketeers, fantastic PR. Then you've got the rise of the challenger banks that are great at creating a bit of froth, certainly in the fintech community. I think it remains to be seen in terms of the long-term viability of some of the business models that we see. there's, as we were talking before we started recording, that there's a lot of VC capital propping a lot of these organisations up. We are one of those companies, but we've got a good rigid connection between our burn rate and our funding rate. And if you let the burn get too far ahead of the funding rate, then you don't have a model. I'm not privy to a lot of the other organisations, obviously, but there are some organisations that do appear to be subsidising customer service.
Very diplomatic. How many customers does CurrencyCloud have, and how much business do you do?
We have around 250 enterprise customers. An enterprise customer being a bank, a fintech, a payments company, a remittance business, or an e-commerce. And underneath that, there must be, it's difficult to say actually, because we don't have view or visibility on how many customers our customers service, but we estimate that number, that the indirect number of customers, to be in the millions. In terms of volumes of processing, it's around $6 billion a year across nearly 3 million payments at the moment. I haven't seen the numbers for last month. It tends to step change every time we take on a customer. We see a big step change because it's not a linear growth. We are forecasting to double that this year and again next year, which gets a little bit challenging as the numbers get bigger, but we're going in the right direction.
Sure. Are there any case studies you would want to talk about, customers of yours and the services you're providing?
Yeah, absolutely. So there's a couple actually. I won't bore you with all of them. There's lots of them available on the website if people are interested to see more context to bring it to light. But one that we like to talk about is Travelex, actually, because it's a perfect illustration of the viability of our business model. So Travelex is an organisation that doesn't need any introduction. They are, 50 years old as a brand, one of the early specialist FX providers in the cash industry, in the cash business. But subsequently they had a very, very successful commercial FX and payments business where they service business payments for corporates and retail customers. I used to compete with them actually in my HIFX days. They sold the business 7 years ago to Western Union for $1 billion, back when you had to be worth $1 billion to achieve $1 billion valuation. And then 5 years after that, 2 years ago, their restrictive covenant expired. And they took a long hard of the business, and there'd been a recent change in ownership. Has been acquired, or 50% acquired by UAE Exchange. And they realised that they had a huge amount of equity in their brand, a huge amount of brand capital, but it was slowly being eroded by the rise of fintech. The majority of their business was bricks and mortar banknotes in airport concessions and what have you, and they recognised that actually this is not in a downward spiral, but it's going to start eroding. So they needed a digital story. So they took the decision to go back into the provision of corporate and retail FX and payments. Similarly, to my experience, they recognise that the world's changed and it's no longer about just the provision of a better exchange rate, advice and guidance in terms of exchange rate movements and a better service. And the story was all about digital integration. And they spent some time talking to SMEs and finance directors of mid-caps and what have you, and they recognise that your average finance director is frustrated with the fragmented nature of his day-to-day workflow. So he might have separate ERPs and accounts packages, applications for purchasing of foreign exchange, applications for making payments, underpinned by his bank as a custodian of his funds and what have you. And this day-to-day, there's just this disconnect in terms of his day-to-day workflows. So what Travelex decided they wanted to do was try and pull together all of those functions in one application, which was quite an ambitious project. And they recognised that in focusing on the customer acquisition, on the customer engagement layer and the customer acquisition, it would mean that was their differentiator. So they realised they didn't need to build the nuts and bolts, the payment engine behind that. And they called on our API and recognised that actually we could help them meet that need very, very quickly, which is a great validation from our perspective, because obviously Travelex understand foreign exchange, understand risk management, understand payments. They have bank accounts and entities all over the world. But rather than spending the time, effort and money to build that mechanism themselves, they decided, why reinvent the wheel? Let's outsource that to these guys, and we can focus on the customer engagement layer. And that is exactly what we set out to achieve when we established the business.
Wow, that's amazing validation. So you have a huge FX international payments company outsourcing its FX international payments to you.
Yeah, absolutely. And another one, just a very, very quick one actually. So Standard Bank of South Africa. In South Africa, there's a big foreign exchange market. If you're a South African resident, you are painfully aware on a day-to-day basis of the volatility of your domestic currency on a global stage. So foreign exchange is a big thing in the eyes of pretty much everyone in South Africa. And the capital markets guys recognised they were losing a lot of business to these fintech startups, and losing a lot of FX business to credit card companies, because a lot of South Africans are buying goods and services on American exchanges like Amazon, for example. So they wanted to build a product that enabled them to compete. And obviously, Standard Bank being a bank, to reference your point earlier, obviously could do this themselves, but they recognised that actually hacking into a legacy banking platform was going to take too long, too complicated, too expensive, and probably wouldn't happen once they start allocating tech resource to it. So to cut a very long story short, they took our API and leveraged the fact that we're an e-money issuer. So between us and a third-party app vendor, we've collaborated with the bank to build a smartphone-based application that looks a lot like some of the fintech companies we were talking about earlier. So it's a wallet, it's an application, it's a foreign exchange service, all on a payment, and we are doing some of the FX, but most of it's done by the bank. But the thing that they're tapping into is our global domestic banking network. So we are providing Standard Bank the ability to make local payments on the local clearing networks quickly and efficiently. And once the decision was made, and once we've gone through the procurement process and the build started, we got the product stood up and operational with them inside 3 months. And that would have taken 18 months within the bank, not because they haven't got the resource, but because they just haven't, their technological roadmap is just focused on other things. So it's a great win for them.
You guys closed a big funding round earlier this year with the prestigious Google Ventures. What are CurrencyCloud's plans going forward?
Yeah, we're excited about that. It's again a great validation, and the Google guys are brilliant to work with. I know our tech team are really excited, as you'd expect, but even on the business level, the Google Ventures guys, I mean, Tom is all but a rock star in VC circles. But at the end of the day, it's just money. It's just capital. So it will allow us to execute on our ambitions of continuing to expand the US business. We need to grow that now. We need to start scaling that. And finally, our Asia market entry strategy. We need to start building out our Asian story so we can then be processing transactions in all 3 of the major time zones. So there's a lot of work to do there, actually. There's an infrastructure to build and markets to map and networks to establish.
Let's wrap up with one final question. What advice would you have for startups in the payment space? Pick another industry. Yeah, fintech. It's funny enough. I was reading an article on LinkedIn the other day, actually, and that question was asked: what one piece of advice would you give to a fintech starting now? Don't. It's hard. It's challenging. It's super competitive now, and there are a lot of organisations apparently doing the same thing, and everybody's got a little niche. The flip side is it's never been as easy to get a product stood up from a technology point of view. The collaborative economy, the open APIs, it's really easy to get a product stood up now in the grand scheme of things, but you've still got some fundamental challenges. One is the regulatory environment. KYC is a thing. You can do that relatively straightforwardly. I sound like Donald Trump. You can do that in a relatively straightforward manner. As I touched on earlier, getting bank accounts is really challenging. But the other big challenge at the moment, and this is a global phenomenon, is there's just not enough developers in the world.
That's one of our biggest issues. We're below headcount on our tech team, and we have 6 tech teams. We are below headcount on all of them at the moment, and actually, as part of the fundraise, we have now agreed a budget to add 2 tech teams so we can go faster on the development side, and we're really struggling to hire people. Really struggling, and that is not a unique story. That's not unique to London. That's a global phenomenon. So that's the challenge.
Steve, what's the best way for people to find out more about your work and connect with you directly?
I'm on LinkedIn. I'm on Twitter. Company is very prevalent on Twitter and LinkedIn as well, and obviously through the website.
Steve Lemon, thank you very much for joining us today.
Thanks very much. Good to be here.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.